Welcome to BAS video presentations of MTL groups. This is the contents of our presentation. Firstly, Tuan will give an overview of selected strategy and overview of round 3 results. Next, Lee will review the decision and evaluations of round 3 results. Last but not least, Mai will give a forward planning of our company.
The high technology segments have a higher growth rate than the low technology segments, which means there would be an increase in the demand of high technologies in the next 8 years. Therefore, at first, we decided to follow the niche differentiation strategies. However, there is a high level of risk associated with these strategies because high technology segments have low profits compared to high level of investment in them. Therefore, we decide to switch to the broad differentiation by maintaining our presence in traditional and low-end segment as well. It will help our company to gain more sales and be more profitable if other segments fail. It will be safer for us to choose these strategies. By adopting these strategies, we will try to maintain our presence in every segment. We will gain a competitive advantage by distinguishing our product with excellent design, high awareness, and easy accessibility. We also focus on product improvement of high-end performance and size segment. Our product will keep pace with the market, offering the improved size and performance. We will price above average. We will also expand the capacity as it will generate higher demand. As you can see from the result from round 3, we make a heavy loss. The loss have a negative effect on our financial indicators, including the return on sale, return on equity, and return on equity. They are all negative, and this is not a good news for us. However, we still managed to get through with no emergency loan. In this round, we make a higher number of sales compared to the last round. However, we are still behind many companies in the industry except for Erie Company. Even though we have a higher number of sales compared to last year, the contribution margin dropped from 33.2% in round 2 to only 28.8% in this round. However, this year's contribution margin is still higher than Erie's and Ferris contribution margins, even though the Ferris number of sales is much higher than our number of sales. Despite a negative profit, we also have some achievement to be proud of. We are the market leader in the performance segment with 25% of market share. We also dominate the size segment with 28% of market share, and there is no emergency loan. However, there is some problem that we need to face and solve in next round. The biggest problem is our negative profit. The negative profit can be expected because we make a heavy investment of more than $50 million in the total quality management. Another reason is that our selling general administration expense is quite high, that account for 70% of our sales. We also launched a new product in the high-end segment, and in the high-end segment, we make a loss of $122,000 last year. In inventory, we experienced stock out in the low end and excessive production of traditional product. Our stock price fall to minus $21.66 is mostly because of our negative profit, which bring down our earning per share and price to earning ratios. The bond rating also dropped to B rating from A in round 2.
My name is Lee, and now I will talk about what we did in round 3. Firstly, we launched new product in high-end segment, and our product will come out to the market in round 4. Secondly, because now we are focusing on niche differentiation strategy, so we decided to sell 100 capacity of traditional segment. The reason for this action is that we can have more capital to invest in buying capacity for higher end products. Thirdly, we invest to increase automation levels of higher end products because we believe that this can help us to reduce labor costs and increase productivity index. Next, we spend on promotion and sales budgets because we want our customer accessibility and customer awareness to increase by 10 to 20% as compared to round 2. After that, we decided to spend 5 million on recruiting spend and 70 training hours for each employee. This can help us to increase 7.5% in productivity index. The last thing we invest on is TQM. We decided to spend 15 million on the total expenditure of TQM because the figure showed that in the next round we can reduce material costs, labor costs, admin costs, and life cycle times, as well as the demands increase. From the beginning of round 3, we all spend and invest, so we decided to issue bond and borrow a short-term debt of 7 million to avoid emergency loan. To evaluate round 3 results, we think that we achieved our target for the year because we are now the market leader for performance and size. Moreover, we have no stock out for these two segments. And we're also launching a new product in the high-end segment. The only problem is that we have high investment costs, so we incurred a loss in profit, and our high-end product was not positioning well, so we lose the market share, as well as incur a lot of inventory in our warehouse. For lower-end product, we have two problems. The first one is stock out in lower-end segment. This is positively unexpected because we didn't change much in R&D for the lower-end product. We keep it to see how it drifts in the perceptual map. Secondly, is the existing inventory in traditional segment. This is negatively unexpected because we did a lot of R&D, change, sale promotion budget, but our product didn't positioning well. After round 3, the company had accelerated advantage to continue niche differentiation strategy because we have the base of huge investment in HR and TQM. So we accept bearing the loss in round 3 for the next year again.
We have learned that investing in TQM would reduce significant material, labor costs, and administrative costs. Hence, we plan to invest in TQM stronger in next round. From this round, we also learned that we should produce more than the forecast amount 25% so that we can avoid stock out. Since position of high-end is wrong, customers are not interested in our high-end product. It shows in drop of sale and customer survey score. We will improve its position in next round, meanwhile maintain good position of product in performance and size segment. Spending for human resource will be increased for next round as we plan to focus on higher end product and we want to increase productivity and reduce turnover. Lastly, from last round, we issue a lot of share, but we incur loss, so share price dropped terribly. So next round, round 4, we will reduce number of share issue and issue more bond to expand capacity.